My goal for this channel is to teach you how to make more money in the stock market. In today's video, I'll do that by discussing 6 high-powered growth ETFs you should definitely consider for your portfolio. All 6 of these ETFs have significantly outperformed the S&P 500 over the past 5 years. The first ETF on this list is the Technology Select Sector SPDR Fund, or XLK. XLK invests in companies from the technology sector and electronic media subsector within the S&P 500. This includes major technology firms that are leaders in software, hardware, IT services, and semiconductors. XLK allows investors to gain broad market exposure to the U.S. technology sector, which is known for its potential for high growth and innovation. Taking a look at XLK's sector weightings, we can see that it invests exclusively in technology. The top 10 holdings account for 66.36% of total assets and include technology giants like Microsoft, Apple, Broadcom, NVIDIA, AMD, Salesforce, Adobe, Accenture, Cisco, and Oracle. XLK has net assets of $65.42 billion, an expense ratio of 0.09%. Current dividend yield is 0.71%, and it currently holds about 67 stocks in this fund. The current price is $197.33. Now let's compare this fund's performance to the S&P 500 over the past 5 years, and we can see that XLK has a 5-year return of 154.75%, which beats the S&P 500 significantly. XLK is a pure technology play, making it more specialized than the more diversified growth ETFs we'll get to in this video. This ETF's concentration in only one sector can make owning this ETF more risky, but provides excellent exposure to technology, and I believe this makes it an excellent addition to a well-diversified portfolio. Before we move on, I want to take a quick second to ask you to like and subscribe if you haven't already. I appreciate the support. Now back to the video. This next ETF is a favorite of mine, and I currently own shares of this in my Roth IRA account. This ETF is the Vanguard Growth Index Fund, or VUG. VUG invests in large cap U.S. stocks exhibiting growth characteristics and tracks the CRSP U.S. Large Cap Growth Index. This includes companies with high potential for above average earnings growth in sectors like technology, consumer services, and healthcare. Like with other ETFs on this list, you should be aware that the focus on growth stocks can offer high returns, but may also present more volatility and risk compared to value stocks, particularly in turbulent market conditions. VUG has net assets of $226.52 billion, which shows how massive this ETF is. Has an expense ratio of 0.04%, current dividend yield is 0.53%, and it currently holds about 199 stocks. The current price is $327.83. Taking a look at VUG's sector weighting, we can see it is more diversified than many of the ETFs on this list, with technology making up 47.63%, followed by consumer cyclicals, communication services, healthcare, financial services, industrials, consumer defensives, basic materials, real estate, and energy. Taking a look at VUG's top 10 holdings, which make up 56.96% total assets, we can see technology giants Microsoft, Apple, NVIDIA. We also see other notable companies like Amazon, Meta, Eli Lilly, Tesla, and Visa. The 5-year return for VUG is 104.10%, easily beating the S&P 500. What differentiates VUG from other ETFs on this list? VUG offers a broad, diversified portfolio of U.S. large-cap growth stocks in various sectors, not just technology like XLK that we previously discussed. I love this diversification across sectors, but also focus on growth, which is why I hold this fund as part of my portfolio. The next ETF on this list is the Charles Schwab Large Cap Growth ETF, or SCHG. This is one of the largest, most liquid, and most solidly performing ETFs in the large growth subclass. This ETF has been around since 2009 and targets large cap growth stocks in sectors like technology, communications, and healthcare. This fund is well diversified, holding around 250 different stocks and has a very low expense ratio of 0.04%. It has over $26 billion in net assets, and the current price on the ETF is $88.69. It also has a modest dividend yield of 0.43%. Over the past 5 years, SCHG has outperformed the S&P 500 with a return of over 118%. Taking a look at SCHG's top 10 holdings and sector weightings, we can see that it's heavily weighted in technology with over 47%, followed by communication services, healthcare, consumer cyclicals, financial services, industrials, basic materials, consumer defensive, energy, real estate, and utilities. The top 10 holdings also include Microsoft, Apple, NVIDIA, Amazon, Meta, Alphabet, Eli Lilly, Broadcom, and Tesla. SCHG does a great job of blending size, quality, and growth, and is ideal for those seeking growth through well-established companies with a relatively low cost of entry. One con of this ETF is that it is limited to large cap stocks, potentially missing out on small cap opportunities. What makes this fund different from other ETFs on this video? Well, truthfully, it is very similar to VUG, holding stocks not just in technology, but also in communications, healthcare, and other sectors. Both VUG, which is managed by Vanguard, and SCHG, which is managed by Charles Schwab, are great funds, and they offer more growth sector diversification than pure technology ETFs. Moving on, the next growth ETF on this list is the Vanguard Information Technology ETF, or VGT. VGT focuses almost exclusively on stocks within the US technology sector by investing in leading tech companies involved in software, hardware, and IT services. VGT provides exposure to the tech industry, seeking out companies with high growth and innovation by capitalizing on trends like digital transformation and technological advancements. VGT holds around 313 different stocks and has an expense ratio of 0.1%. It has over 77.63 billion in net assets, and its current price is $494.13. Over the past 5 years, VGT has outperformed the S&P 500 with a return of over 135%. Taking a look at VGT's sector weightings and top 10 holdings, we can see that it invests almost exclusively in technology. And the top 10 holdings include tech giants Microsoft, Apple, NVIDIA, Broadcom, Salesforce, AMD, Adobe, Accenture, Oracle, and Cisco. These top 10 holdings account for 60.10% of total assets. VGT invests almost exclusively in technology, but differentiates itself by investing not only in large caps, but also in mid, small, and micro cap companies. This next ETF is massively popular and for good reason. It is the Invesco NASDAQ 100 ETF, or QQQ. This ETF primarily invests in the 100 largest non-financial companies listed on the NASDAQ stock exchange. This makes it heavily weighted towards technology giants like Apple, Microsoft, Amazon, and Google's parent company Alphabet, as well as top companies in the consumer services and healthcare sectors. QQQ is very popular and known for its high concentration in the tech sector, which has contributed to its strong performance during periods of technological innovation and growth. QQQ has 247.12 billion in net assets, an expense ratio of 0.2%, which is the highest on this list so far, and a current dividend yield of 0.61%. The current price of this ETF is $431.51. Taking a look at QQQ's top 10 holdings and sector weightings, we can see that over 50% of this fund is invested in technology, followed by communication services, consumer cyclicals, healthcare, consumer defensives, industrials, basic materials, utilities, financial services, energy, and real estate. The top 10 holdings account for 46.57% of total assets and include companies like Microsoft, Apple, NVIDIA, Amazon, Meta, Broadcom, Google, Tesla, and Costco. QQQ's 5-year return is 131.32%, easily beating the S&P 500. What differentiates QQQ from other ETFs on this list is that it invests in top technology and non-technology growth companies within the NASDAQ, making it a favorite for investors betting on technology. All right, we've made it to the last fund on this list, which is not truly an ETF, but an investment trust. This is the Grayscale Bitcoin Trust, or GBTC, which offers investors an opportunity to gain exposure to Bitcoin without the complexities of direct cryptocurrency ownership, such as managing wallets and private keys. This can be a significant advantage for those unfamiliar with the technological aspects of cryptocurrencies, or for investors looking to include Bitcoin in tax-advantaged accounts like IRAs. However, there is a notable downside, is that GBTC often trades at a premium or discount to its net asset value, which means investors might pay more or receive less than the actual value of the underlying Bitcoin. Additionally, the trust management fees are relatively high compared to traditional ETFs. Future expectations for GBTC hinge on the volatility of Bitcoin itself, making it potentially high-risk, high-reward investment. The performance of GBTC will largely follow Bitcoin's price movements, which are influenced by factors like regulatory developments, technological advancements, and shifts in investor sentiment toward cryptocurrencies. GBTC's current price is $57.05. It does have a high expense ratio of 1.5% and holds net assets of about $19 billion. The reason I include GBTC on this list is because I believe cryptocurrency will someday be mainstream. I also want to show you that GBTC has returned a massive 715.15% over the past 5 years. So which fund should you choose? Well, first, you probably don't want to buy all these funds, because they do have a lot in common and you would have a ton of overlap. Adding one of these funds to supplement your portfolio can provide the potential to increase your returns. Decide what interests you. Maybe you want exposure to tech stocks in large, mid, small, and microcap company sizes. If so, you might choose VGT. Maybe you want to invest only in large cap tech stocks. If so, then choose XLK. The choice is yours. I need to remind you that I'm not a financial advisor and nothing in this video is financial advice. Do your own research or speak to a financial advisor before making any investment decisions. And lastly, don't forget to like this video if you found it helpful and subscribe for more investment insights. Share your thoughts and your favorite growth ETFs in the comments below. Thank you for watching. Happy investing.